you. Brace yourself. You're here because you have problems. Oh, I'm so sorry. Here I am. I am going to just do one quick check-in here. Forgive me, I'm a little technical question and I want to. I think we're okay. Thank you. Thank you for waiting and apologies. There we are. You're here because you have problems, as I've said. Maybe you've been closed, like the client that I was talking about earlier. Maybe your employees have all decided not to come back after this is over. Maybe you've used up all of your war chest. Maybe you've been sick yourself. Everyone has problems that have come as a result of the COVID-19 crisis. And it's going to take some doing to figure out how to get back on track. There we are. My apologies. Here are the, do we know? We don't know when you're going to reopen. We don't know if you're going to reopen. You don't know whether your staff will come back. Other challenges that people are looking at is, how am I going to be allowed to do my business? What kind of disinfecting measures am I going to have to take? What kind of social distancing measures are going to happen in my waiting room? How can I afford to do a whole new build out? How am I going to pay my landlord? How am I going to pay my mortgage? How am I going to pay my creditors? Like I said, don't panic. To quote Anthony Scaramucci, the mooch, panic implies there's no rational thought taking place, that we're frozen and incapable of adjusting. What you have to do is stop, take a breath, take several breaths, make a plan. You want to set yourself away from the noise, away from the people who mean well, away. Sit down and think about what is going to make the most sense. What can I do? How can I carry on? To do that, you have to start by taking a very rational and cold look at where you are. Think, don't panic. Think, there's a difference. Take a look at where you were in December. What was your 2019 cash flow? Was it enough? If not, why not? What was your profit margin? Did you have a profit? If not, why not? Now, what about January and February? What was your cash flow then? Did you come out of the gate, boom, boom, best year ever, or not? Why? Why not? What was your profit margin? Write all this down. Start a new Excel sheet. Start any kind of new analysis. Do this in QuickBooks, however you want, but put it in front of yourself. Take a look at where you were. Now, what happened in March and April? When did business drop off, and how do your figures compare to March and April 2019? A lot of people I've talked to are casting this really rosy glow of what life was like a year ago. And then when we go back and we look at their numbers, we go, wait, you're not that far off. March and April were bumpy for you in 19. March and April are always bumpy for you. In other cases, no. March and April are your big months, and you really got hit hard. But you need to know. And you need to know, what was your cash flow? Was there any cash flow? If not, why not? And why am I talking about this? Why am I not just explaining the different types of bankruptcy? This is not going to do you any good. You need to know how to use bankruptcy as a tool. Right now, where is your business getting money? Sales? Plenty of businesses are. But they're specific businesses, internet security, disaster recovery, to name a couple. PPP and EIDL loans. Did you get an EIDL loan? Well, then miracles do happen, because most of them from early April are still jammed up in processing. Do you have other bank loans out there that you're drawing on, business line of credit? Or are you using your savings? Or are you using your credit cards? Take a look. How much have you drawn down your line of credit? How much have you eaten into your personal savings? How much have you eaten into your personal credit cards? Know that. These are loans that you are making to your business. If you're drawing from your savings or credit card, your business owes you the money back, technically. Hopefully, it'll come from future sales. All right. So now you've got a sense of where you're getting your money. You know where you are. You know what happened last year. You know what happened early this year. And you know what's happened since. You know where you're getting your money to stay afloat. Next thing you want to look at, and this is the basic of any strategic plan, where are you going? This is the time when you close your eyes and you dream. What does my business, what does my practice look like for the future? Can I turn my restaurant into a pop-up market and just keep putting up good, fresh, hot food in an environment where people can come in their masks and gloves and pick up something and check out contactless and out they go? There's a market like that in my hometown. They've made a fortune forever, and it's a good business model. If you've got a restaurant, you may be able to reconfigure. One of my other clients has been sending out emails talking about how the moment we closed, we began planning to reopen. And they've been keeping their customers up to date on what they're doing in their business to make it a, shall we say, infection-unfriendly environment. Not just this infection, any infection. They're changing the way their waiting area looks so that people will, A, come in the door more individually. B, if they must wait, they will be in their own little booth. Things like this. You can think about that. How am I going to set this up? How will this work? How can I make my customers, clients, patients, whatever you care to call them, comfortable, especially in the early phases of startup? And that's exactly what's coming. Startup. All new business for everybody. Everyone's got to change the way they do business. It's going to be a while before somebody says, oh my gosh, I missed a half a day of work. I had that COVID-19. I felt terrible for hours. Yeah, it's going to be a while. So dream, where are you going? What can you do? Make a picture, draw a picture, use a vision board, get it out there. And now you plan. Will you reopen the same business? Or will you close that business and start a new business? If you're in a service industry, well, maybe you don't need that office with 27 people banging on their computers all day. Maybe you can do it remotely. Maybe you're going to move to a bigger location. Don't forget, landlords are hurting now too. They might say, yeah, sure, we can double your space so you can give your people more privacy. You never know. On the other end of things, are you going to close and go to work for somebody else? And I just heard today about actually an attorney on the North Shore who just said, you know what, forget it, I can't. I'm just going to go get a job. Okay, that's a plan too. And it's a good plan if it's right for you. So now that you know where you're going, how are you going to get there? It's the basics of any strategic plan. Where are you? Where are you going? How are you going to get there? What do you need? What you need, you write a new business plan. What's in your business plan? Describe your business. This is your new business. Even if it's exactly the same as before, this is your new business. Your product. What is it you're selling? Are you selling youthful solutions, i.e. Botox, Juvederm, etc.? Are you selling pickled peppers? Did you used to have a trendy coffee shop, and are you now selling a great ground coffee to go? What's your business? What's your product? Who is your market? Who is going to be buying from you? Are these the same people as before? Are they different people? If you were finding that your customers were in an older age group, can you reconfigure so that your customers are in a younger age group? You might be able to, you never know. Again, it comes to that business plan. Read, think, plan. Figure out what you're selling and to whom. If you're an independent primary care physician, and there are still some out there who haven't been eaten up by the hospital, same thing. Who are your primary care patients? They're usually older. Okay. What are you providing? Providing primary care service. How are you going to go about that? Can you continue to see people remotely? Is this something they're comfortable with? Got to ask these questions. What's your competitive advantage? What makes you the go-to business or service? What's going to drive people to see you, to pay you, and to come back time after time? These are the things that you want to have in your business plan. And I can tell you this too. Whether you're going to use bankruptcy as a tool or something else, you're going to probably find yourself pitching a bank for some money. And having a good, solid business plan in place is a big, big, big help. Project your sales, your cash flow, and your return on investment. And this is a lot of good stuff to keep you busy while you're home with your loved ones, right? How much money do you need to start? How much do you have to spend on your new startup? Do you have collateral? What's the collateral? And is it collateral that you can afford to lose? Whenever you're doing a business plan, whenever you're looking at funding a startup, whenever I advise people about starting up, one of the things I talk about is collateral you can afford to lose. Which means I don't regularly recommend that people put their houses up as collateral. What else do you have? Give it some thought. Talk to your friends, talk to your family. Friends and family, by the way, overwhelmingly are the investors in new startup, in new small business ventures. And yours very well may be a new small business venture. Okay, you've got all that. What kind of entity are you going to be? If you've been a sole proprietor all along, maybe it's time to think about starting up as a limited liability company or a subchapter S corporation or a professional corporation or a limited liability partnership. All different kinds of entities do different kinds of things. And you want to know who's who. Is it going to be all you by yourself again? Or are you going to add Uncle Bob, who's going to put up the $100,000 that you need as a member in your new limited liability company? And take a look at what else you have. Remember I said, what do you have for collateral? Well, what else do you have along the lines of what you can use? Intellectual property, your trademark, your trade name, your copyrights. Even if you haven't officially registered them, do you have stuff that you can use in your new business that's going to help you get a leg up? Special skills. What is it that you do in your line of work that makes you different, special, a little different from your competitive advantage, though they may be linked? What is it that you have that's a special skill that can help you in your new business? And I keep talking about new business, and that just doesn't dovetail with the traditional idea of bankruptcy, but it should. It's just a matter of perception. Now, once you have all that figured out and you realize that there is no way that your new business can support itself and your old creditors, that's when you take a look at whether using the shelter of the bankruptcy court can help you get you and your business where you want to be. That's what it's all about. All about getting to where you want to be. Feeling good, feeling successful, bills paid, creditors under control, right? Contributing, we all want to contribute. There isn't a single person here in my audience, and I know you all, who doesn't feel compelled to contribute as a small business person to society in whatever way. And using the bankruptcy court, using the shelter of the bankruptcy court can very often help you continue to do that. Now, what is bankruptcy? Everybody's heard the word. Some of us have heard it in our nightmares. Here's the definition. Right there in front of us, I'll read it. Bankruptcy is a federal legal process that helps individuals and companies get a financial fresh start by discarding or reducing unmanageable debt. Now, some companies use bankruptcy to end business and liquidate assets in an orderly way. Other companies use bankruptcy to reorganize their business, like I said, discard, reduce unmanageable debt. So you can do either one. And there are a number of ways that bankruptcy can help. Number one, The second you file a petition, no matter what kind of a petition it is, the second you file a petition in bankruptcy court, your creditors have to stop. As soon as that notice goes out, they have to stop. They can't call you. They can't write to you. No. All they're allowed to do is file a claim with the bankruptcy court. And there are very, very stiff penalties for creditors who violate what's called the automatic stay. The other beautiful thing that creditors cannot do, they can't foreclose. I cannot tell you how many times I have filed a bankruptcy petition for someone hours before a foreclosure auction, and it stops it. It stops it. It gives the debtor, the person who's behind on their mortgage, a chance to breathe, to think, and figure out, okay, now what am I going to do? And what's best for me? Your creditors can't sue you. They've been threatening to sue you, and you file a bankruptcy petition, they're stuck. They can't. So you're not going to be facing, as so many of my clients, notice after notice after notice from the small claims court that this credit card company, that credit card company, or the other credit card company has sued them. It's a very, very powerful tool because it gives you time to think. So, great. How else can bankruptcy help? There are different chapters of bankruptcy, and you probably heard about it. Shreve, Crump, and Loach files Chapter 11 bankruptcy. Well, again, Neiman Marcus, J.C. Penney, filed Chapter 11 bankruptcy. You've heard the word chapter in bankruptcy. Each chapter of the bankruptcy code addresses certain issues. Some of those issues are administrative, how do you file, what do you file, et cetera, et cetera. And certain chapters of that code address specific types of procedure for specific types of debtors. So, Chapter 13 and Chapter 11 are reorganizations. They allow you to categorize your debt, write a plan to pay your creditors over time, and then, after you've made all the planned payments, any remaining debts are discharged. And I capitalize plan because it is a proper noun. You stay open. Great. What's Chapter 7? Well, Chapter 7 is a liquidation. That's what's called a straight bankruptcy. And determining which one is right for your business, Chapter 7, 13, 11, depends on that business plan that you already wrote. What are you looking at in the future? Now, if you are a sole proprietor and you have decided that you are throwing in the towel and you're going to go to work for Uncle Bob, then we're going to probably look at a Chapter 7. If you have a lot of individual debt for your business, it's a different thing. So Chapter 7 is best if you're sole proprietor, like our little podcaster here, if your business is service related and you plan to close the business. You'll be able to discharge, otherwise known as get rid of, some, most, or all the debt. Then you can start a new business or you can go to work for somebody else. Your choice. Those debts are gone. People, they can't come back. They can't say, oh, hey, you're making a lot of money now. Nope, they're discharged. They're gone. They're over. There are limits as to how much income you can have in order to file a Chapter 7. But in general, if you're closing the business, this is a good way to go. And again, with sole proprietors, that business debt is almost always, of course, it's always in your name. carrying it around on your back. I'm sure it was great having all those creditors sitting on your shoulder at the virtual Easter table. Let's get rid of them. Like I said, Chapter 7 is called a straight bankruptcy or a liquidation bankruptcy. Here's what happens. You filed a petition, call stop. You breathe a sigh of relief. The court will appoint a trustee to oversee your case. It's a really fancy word for a lawyer who also represents debtors usually, who's appointed by the court to do the paperwork. That's what a trustee is. Every state and the federal government have a list of exempt assets. And for those of you who are my clients, all 495 of you who are watching today, I've always been after you to have a homestead, right? Why? Well, because an exempt asset in bankruptcy is the equity of in your home up to the amount of the homestead exemption. So there's an exempt asset. Your stuff, your clothes, the tools you need for your business, usually your car, not the, well, the Lamborghini is a little different. I know you. But you get to keep all the exempt assets, all right? Then any non-exempt assets that you have or your business has are sold. And the money is distributed to the creditors who have filed claims, important creditors who filed claims. A lot of creditors don't bother. Now, once all that happens, you get a discharge and your creditors can't bother you anymore. In the 25 plus years that I've been practicing bankruptcy law, how many times has a trustee taken possession of and sold assets? Twice. They were both businesses. They were both business Chapter 7s. They were both closing down, and nobody wanted the stuff that we sold. Never had it happen in a personal Chapter 7. So you can breathe a sigh of relief. Nobody cares about your diamond ring. Really, they don't. You get to keep it. Now, let's move on to Chapter 13. Chapter 13 works for individuals with regular income, even if it's self-employment income, who have unsecured business debt under $419,000 and under $1.257 million in secured debt. Secured debt, that's your home mortgage. Unsecured debt, that's your credit card, your bank line of credit. Those are unsecured debts. So if you have regular income and you have individual debt under these thresholds, you can file a Chapter 13. This is an individual reorganization. Again, a lot of my sole proprietors, a lot of my LLCs and my subchapter S clients have personally guaranteed business debt. And who's chasing them? The creditors are chasing them because they know that the individual is going to be a lot more stressed about paying this debt than the company that has no assets, okay? So you're Chapter 13, you're in business, you're a sole proprietor, or you're a single member LLC, an operating manager of an LLC, you've taken on guaranteed business debt, you may fall in for Chapter 13. Now, what happens with Chapter 13 is different. You keep running the business. You keep going on about your day-to-day business. You have your exemptions, same as in Chapter 7. And what the court looks for is what's your disposable income. Now, notice I didn't say that a trustee comes in. A trustee does not come in. You continue as what's known as a debtor in possession. So you're running the show. The court is kind of off to the side. We, in the office, we go to our software, we plug in the data, and the algorithms, or is it algorithm? I should have looked that up. Anyway, calculate what's your disposable income. And then your plan is set up so that you pay your disposable income to the court over 3 to 5 years. And that depends on the amount of your debt, the amount of your income, and the number of creditors who've made claims. So we know whether you're going to go 3 to 5 years. Your creditors get a percentage of what you owe them. Those are your unsecured creditors. Your secured creditors get everything that you owe them. And then your priority creditors, for example, the 2017 income tax that you didn't pay, that's a priority creditor. They get paid in full. Now, nobody can bother you while you're in the plan period, that 3 to 5 years, as long as you're making the plan payments. After you make all the payments, again, the remaining debt is discharged and you're on your way and nobody can bother you anymore. You also will have learned a lot of valuable lessons about how to run your business in a smart way. Now, Chapter 11 is a business bankruptcy. And in that case, your attorney works with the United States Trustee's Office and the creditors to make a reorganization plan to restructure your debts so that your creditors are paid over time, again, about 5 years. Usually you see this happen with large businesses, the ones I named, Shreves, Neiman Marcus, Texaco, long time ago. There are a mess of them coming right now. The bunch of energy companies have filed for bankruptcy protection because, as we all know, the price of oil is subterranean, no pun intended. Big businesses do Chapter 11, but individuals and small companies can file for Chapter 11 protection as well. And actually, I'm one of the few attorneys in Massachusetts who does individual Chapter 11s. The cool thing is that right before we got nailed with this COVID-19 thing, Congress enacted subsection 5, Roman numeral 5, of Chapter 11, and that's for small businesses that are too big and individuals that are too big to qualify for Chapter 13, but who have under approximately $7 million of debt. And the chapter subsection 5 bankruptcy goes a lot faster. The trustee works as a member of the team as opposed to a neutral member kind of the opposition. Either way, you make a plan to keep your business active while you pay the creditors a percentage of the debt over a set period. We've done some cool things with individual Chapter 11s, like I had a client who owed the IRS $1.2 million in back income taxes. Remember how Martha Stewart went to jail over that? He didn't go to jail. And last week, the judge said, wow, your plan's in really great shape. So I'm going to allow your disclosure statement, which is the next to last step in getting the plan confirmed. So you can use Chapter 11 to deal with the IRS or Department of Revenue or both. You can use Chapter 11 to deal with your landlord. You owe 3 months of back rent. Is the landlord pounding down your door? All the creditors can come into your Chapter 11 bankruptcy, whether it's a regular Chapter 11 or a subsection 5. We work out a plan. It really is a team effort between the creditors, the debtor, and the court to make something that will work. And the other really interesting thing is that in Chapter 11, a lot of times you end up borrowing money. So the banks come in and it's like, okay, well, I owe you, I owe Eastern Bank $2 million. And I am behind 3 months. So what I want to do is I want to bring that up current, but what I need you to do is refinance based on my new business plan so that I can do A, B, C, and D to get up going again. We've done that quite a number of times. So it's again, you just see how this is working to allow businesses, small businesses, to get their feet back up under them and take strong steps to ensure their future, however that future might look. So, quick summary. Chapter 7 doesn't require a repayment plan, but you got to sell your non-exempt assets to pay creditors, and the trustee does that for you. Chapter 13 eliminates debts for individuals through a 3 to 5 year repayment plan that lets you pay back a portion or all of your debt. Chapter 11 is a reorganization for businesses and some individuals so that they can stay active in business while paying creditors a percentage of their debt, again, over time. Those are the 3 most common chapters. There's some for farmers. There's one guy in Massachusetts who does those. And I don't have any farmers with me today, so we'll not go there. Okay. This is actually a copy of the Cook County Poor Farm, and you will not go to the poorhouse if you file for bankruptcy, I promise. It's not going to take everything you own. Most regular personal property is exempt. Assets that you need to run your business are exempt. Most retirement assets are exempt. So I had one guy who had absolutely overloaded his retirement plans, and the chapter 11, the judge in chapter 11 said, so we had to figure that out. Usually the equity in your house is exempt, and leased or rented goods aren't subject to creditors' claims. So if you're leasing your car, fine. If you are renting your office equipment, not part of what the creditors can take a piece of. It's not going to kill your credit. Everybody goes, oh my God, it's going to be on my credit rating forever. Yeah, however, most people who file for Chapter 7, if you did a survey and you averaged it all up, the average credit score is about 538. After 6 to 8 weeks, the same survey showed that, and 6 to 8 weeks is about what it takes to complete a Chapter 7, the average credit score had gone up to 620. And why is that? Because this is the whole thing about bankruptcy. First of all, the bankruptcy I'm talking about is a uniquely American experience. It is the brainchild of Governor Daniel Webster, governor of Massachusetts, from my hometown of Marshfield. The idea is you want the debtor to be able to continue to contribute to society, right? So the idea is when you file for bankruptcy, you are saying to your creditors, Uncle, I need an orderly way to get this under control. And that's a whole different thing to a creditor as compared to, chase me, which is what it looks like if you're just avoiding the payments when you're behind. Now, you're not going to have access to credit while you're in bankruptcy, but most people get a secured credit card several weeks after receiving a discharge. Now, see, I'm talking about an individual bankruptcy. And I've had situations where there's an ongoing business. We leave the business alone. It's the individual who's guaranteed the debt. The individual declares bankruptcy. They still get the business credit and still use the business credit. The business does not get sucked in if the individual is declaring bankruptcy, okay? So it's not going to kill your credit, and it's not necessarily the end of credit while you're in your plan period. It's not going to eliminate all your debt, okay? You got to be aware of that. Most tax debt is non-dischargeable. Remember I mentioned something about a priority? Uncle Sam tends to come fairly far up in line. And there's very little tax debt that we can get rid of. We can make a plan to pay it, but we can't necessarily get rid of all of it. Alimony and child support are not going to go away. Sorry, not. Most student loans stay with you, and debts due to fraudulent activity are your problem. Probably not a surprise. You know what else? It's not going to destroy your spouse's credit. If you're married and you file for bankruptcy protection, your spouse goes on. If you've maintained separate assets and debts during your marriage, then you go on ahead. You file, you deal with it. However, nothing happens to your spouse. If you, on the other hand, if you discharge joint debt, your spouse is still responsible for that debt. But again, depending on your personal business plan, that could work. That's the whole idea. And that's what we do in our office, is that we want bankruptcy to work for you. We want this to be a curative measure. Now, what do you do next? Get help. Get help. You can file a bankruptcy petition yourself. It's called being pro se. There's no law that requires you to have a lawyer, but this is not straightforward. And the other thing is, frankly, it's kind of like sawing off your own leg, not to be too gross. You ought to have somebody else do it, so you can step back. If you have help, you have an attorney, what happens is you meet with the lawyer. You find out where you are. You show all of your business plan and everything you've come up with. You decide on a course of action. Then the lawyer will prepare the paperwork. You review the paperwork. The lawyer explains it to you. You sign the paperwork. One other thing that happens is you take an online credit counseling course. It's very easy. It takes about half an hour. So you take the credit counseling course, you review the paperwork, the attorney files the paperwork. Then you are going to have 1 or 2 meetings, depending on the type of bankruptcy that you file. If you file a Chapter 11, the traditional kind, you have 2 meetings, an introductory administrative meeting, and then the same meeting everybody has, it's called a 341 or creditors meeting. And that's where you answer some questions under oath, not in a courtroom. These days you answer them on the phone. But before this happened, you went to the federal building and you sat in a room that looked a lot like a classroom. And the 341 meeting takes anywhere from, the shortest one I ever had was 33 seconds. Generally, they're about 5 minutes. Then that's it. That's it. The rest of the work you do with your lawyer. You don't go to court again unless you're in Chapter 11 when you go to court to have your plan confirmed. That is a celebration day. That's why you need help. You don't want to be doing all the stuff in the middle by yourself. It's hard. What do you need? Okay, I need your last 3 years tax return, state business for you and your business, state and federal for you and your business. I need your payroll records. I need your bank statements, credit card statements, a copy of your deed, your homestead, your mortgages, your mortgage statements, your loan statements, your retirement statements, your cash flow, your profit and loss for the last 3 years, your social security card and a photo ID. Get it together in advance. We will love you forever. Whoops. You need a war chest. This is part of that planning. Money to keep your business and your family going until your business starts to make a profit again. Now, one little thing is you're not going to be paying creditors for the 90 days before you file. And when we meet, I'll explain that. You can use these funds to build your war chest, and that money in your war chest is going to be an exempt asset. but you do need a war chest. Oops, sorry. How much is it going to cost? Okay, you're going to pay a filing fee to the bankruptcy court that depends on which chapter you elect. Okay, $338 for a chapter 7. It goes up from there. Chapter 11s are pretty pricey. There are also trustees fees that are built in. Trustees fees for chapter 13 and 11, those are built in to the court costs. Attorney's fees vary from about $1,500 for a chapter 7 to over $30,000 for a chapter 11. That's part of the reason you want the war chest. Now, myths, legends, and fairy tales. As somebody I was talking to about this said, oh gosh, such a hard subject. So difficult to think about. I don't think so. One of the first things that people worry about, everybody's going to know. Everyone in my neighborhood is going to know. Everyone's going to know. Technically, it's a public proceeding, but you know what? Nobody's going to know unless you tell them. Yes, if you're Neiman Marcus, it goes in the newspaper. If you file, it will go into the newspaper known as Banker and Tradesman. Who reads that? Not everybody. So for the most part, nobody's going to know. If you are in a chapter 11, your checks, who uses checks? Your checks will read XYZ debtor in possession. Nobody knows what that is. Nobody cares. Nobody's going to know. I did have an interesting experience. A client was terrified about somebody finding out that they'd filed for bankruptcy. And we walked into the meeting room where everybody waits to have their 341 meeting. There was somebody else he knew there. They had a good laugh. Okay, this means my business and I have failed. No, it doesn't. It actually means you're smart. You're not continuing to try to run from your creditors. You're not digging a deeper and deeper hole for yourself. Bankruptcy helps you start up again, whether it's in this business or another one or in business for somebody else. It gets the creditors off your back. It will give you peace of mind. Oh my God, I'll be tied up in court forever. No. Most proceedings don't require any formal appearances by the debtor, except for Chapter 11. You may go to court a few times, depending on the complexity, but this is over quite a period of time. So you go to, and these days, you get on the phone. That may not change even after COVID-19. Courts are changing the way they do business. You're not going to be tied up in court. Your lawyers do the work for you. You focus on doing what you do best. I'll get fired. I won't be able to get a job. Discriminating against somebody because of bankruptcy is against the law. Filing for bankruptcy alone does not allow your employer to terminate your employment. And as far as professional licenses go, it can be different in financial services. I did have a client who worked for the IRS. I took her through bankruptcy. She did not lose her job. You just don't. Life gets better, not worse. The worst day is the day before you file. You've done tougher things. You can do this. You can step back, take a hard look at your business, figure out where you are, where you want to go, where you can go, how you're going to get there, and you can decide if using the protection of the bankruptcy court is a tool that's right for you. Reach out to me, call me. I'll help you through it. I'll help you decide. I'll answer your questions. And I thank you all for joining me. This was quite an experience, and I'm glad that you all were able to come. And I look forward to seeing you all in 3 dimensions soon. And I sincerely hope that all of you are back in business and profiting in business before you know it. Thank you so much, and good afternoon.